In this video, we're going to take a look at all of my dividend income from the month of May 2023, and we'll also do a dive into all the stocks I bought this month. And there is some exciting news. I actually did add a new position to the portfolio, so we'll get into that a little bit, and we'll talk about, why I added it and why I did it at this point in time. So first of all, let's just take a look at the spreadsheet here, which we can see before we make any updates. And we did get 2 dividend increases this month, which was exciting. So the first one was from Leggett and Platt, and that was about a 4.5% increase, which was pretty exciting given kind of how they've been struggling over the past year. And a dividend increase was definitely not a given this year, so definitely happy to see that. So the new rate is $1.84 per year. And then the next one was from Apple. A little bit of a disappointing raise, I'd say, from Apple. Only a 1 cent per quarter raise, which is 4.4% as the raise. So we'll update that as well. And then we can also see our projected dividend income right now is $116.02, with the portfolio value around $4,450 before we make any updates. And that gives us a average 5-year dividend CAGR of around 7%. Like I've said in the past, definitely want to bring that up. And the purchase of the stock I made this month that was new to the portfolio is hopefully going to help at least some to bring the CAGR up. So now we're going to head over into Fidelity, and I have all the transactions for the month filtered out from May 1st to the 31st, and we can just download all these transactions as a CSV file. And then once we get those downloaded, we can go back into the spreadsheet here and import this data. And then once we get that imported, I have some custom scripts I can run, and that's going to import all that data into the appropriate spots in my spreadsheet. So we have that data inserted, and we can just run this script that I created, and that's just going to parse those lines of data and then just put it in the right spot that I want it to in my spreadsheet. And these are all scripts I've published on GitHub, so if you do want to check them out and take some inspiration from them or just copy them straight up, you're more than welcome to. And once this is done running, we'll come back and check out what happened this month. So the script finished running here, and this is a summary right here. We made deposits of $1,250 this month, so it was actually a really big month. We made the normal $250 deposit, but I actually made an additional deposit later on in the month of about $1,000 just because I have a surplus of cash sitting around right now, I guess. So I wanted to just kind of get some of it into the portfolio and just get it working for me more, even if I, can't invest it all immediately. I'm still getting a higher rate of interest on Fidelity's money market fund than I am, sitting in my bank account. So that's why I did that. I'm going to invest it all eventually. We made buys worth $489.65, so definitely making some progress there. I'm happy I was able to invest more this month. And then dividends for the month, it was $15.41, which is really exciting. And if we look at the specific transactions here, we made a lot. So I'm actually going to go to the other sheet to kind of filter them out so you can see them in a better manner. But the one I'll showcase here is the Texas Instruments purchase. We bought one share, or I bought one share on May 12th at $160.49. And honestly, I was hoping for it to go, below 160, but it was kind of around that 160 level for a few days, and I thought that was a pretty fair price. And it turns out that was pretty close to the kind of bottom of where it was over the last month, and it has since rebounded back towards, the 170. So I think I got pretty lucky there. So instead of going through each transaction, I consolidated it here with this little invested per ticker tab. So the start date is May 1st and the end date is May 31st because we bought some companies more than once. So for the month, we bought about 3 shares of AT&T at an average cost of $15.89. So that was about $50 invested there. And we bought almost a full share of 3M at an average cost of $96.12. So about $95 invested there. About 0.85 shares of Johnson & Johnson at an average cost of around $158. So about $135 invested there. And then about 0.248 shares of AbbVie, a quarter of a share, around $140 average cost, so around $35 invested there. And then 0.1 shares of JP Morgan at an average cost of around $132 per share, so about $15 invested there. And then because I haven't added the Texas Instruments ticker to my sheet, that's not showing up, but like we saw before, we invested around $160 to buy a full share this month. And then taking a look at the dividends that we received this month, we got $1.42 from AT&T, $2.62 from JP Morgan, $1.69 from Air Products and Chemicals, $2.17 from AbbVie, $1.33 from Procter & Gamble, 50 cents from Apple, $1.32 from Caterpillar, 48 cents from Carrier Global, and then $3.88 of a cash dividend or interest on our cash in the account. So that cash interest is definitely starting to add up, especially since I added, an additional $1,000 towards the end of May. So that's definitely going to be a fairly decent contributor, I think, in June as well. But ultimately, over time, I would much rather be receiving more in dividends rather than cash interest, because that's more of a long-term investment in terms of investing in these stocks rather than just getting the interest on the cash. So we can look at the chart here, and this is definitely an all-time high for this month of dividends, which is really exciting. And the last time we got paid by these companies was in February, and we only made $9.47. So big improvement there, which is super exciting. And then on the year in total, we've made $51.07, already more than we made all of 2021. So that's exciting as well. So I added the Texas Instruments entry into the spreadsheet here, and we'll just go through some of the metrics. So currently the dividend yield is about 2.8%. My personal yield on cost is around 3%. And this position is about 3% of the portfolio. So I definitely want to continue buying it when I see a good opportunity. I honestly thought, 160 was a fairly decent price. I'm definitely going to be buying a lot more if it gets to more like 150. One of the reasons I like this company is they're just a solid, tech company in the semiconductor space, which is awesome. They have very strong financials, and they're definitely going through a bit of a tough time right now, but that's really related to, some macro environment variables that are kind of, out of their control. So I'm certainly happy to buy the stock, and I'm confident they'll do plenty fine in the next few years and decades. And they do have 19 years of consecutive dividend increases, and their 5-year dividend CAGR on average over the last 5 years is almost 16%, 15.5%. So that's really exciting. I certainly don't think they'll be able to keep up that high rate over the next few years, but I think they can do, in the range of 5 to 10%, maybe even a little better in the next few years, and then hopefully ramp it up again in the future as the business starts to rebound some. And the payout ratio is around 55%, which is awesome to see. And we'll be expecting another dividend increase sometime in the September timeframe. So that's definitely exciting. And then if we look down here at the summary, a big jump in portfolio value to around $5,700 because of those cash deposits, and we also invested a lot more. And so that brings our annual income projection to about $136 right now, which is super exciting. That's pretty much a $20 increase this month, which is honestly a huge amount for me at this point, even though it's not all that much. And we did manage to increase our 5-year CAGR just a little bit to around 7.25%, which is definitely going in the right direction. Some of the companies I bought this month, like 3M or AT&T, definitely a little bit on the lower quality side, but they just look to be at pretty good prices for me. So that's why I wanted to pick up some more, but definitely not going to be, piling into these companies a ton more with, all my cash. It's just something where I think it's at a pretty good price. So I wanted to take advantage of that opportunity. But for the most part, I want to be purchasing more high quality companies like Johnson & Johnson, AbbVie, Texas Instruments, stuff like that, especially when I can get them at a good deal. And then if anyone wants to look, these are my current allocations to the sectors. So definitely not super balanced, pretty heavy right now in tech, and about 20% in cash for the portfolio, which is pretty interesting. Definitely have a lot of work to do there. And then financials and industrials around 10%, and then healthcare around 15%. So that's kind of what it's looking at. And we're also going to take a look at the portfolio performance for this month. So this right here is my portfolio's time-weighted rate of return over the past few months. So over the past month, we're actually down about 2.3%, and the S&P 500 is down, or actually up, about 0.4%. So definitely trailing the market there. And we can see over the last really 6 months or so, we're trailing the market fairly substantially, actually up just about 0.5% this year compared to the market, which is up, 8, 9, close to 10%. But when we look back over the full past 12 months, we're still beating the market just by a little bit. We're up about 5% versus the market up about 2 to 3%. So definitely be interesting to see what happens in the next 6 months if we're able to continue beating the market, or what happens there, because obviously the past 6 months we haven't been. But over the long term, I'm really not all that worried about beating the market. Like I've said, I just want to continue owning high quality dividend stocks and buying them at fantastic prices. So that's kind of what my overall goal is with this portfolio. I have been investing in individual stocks about 3.5 years. The first year to two, I definitely made a lot of mistakes, as lots of people do. And so, the last 2 years has been, kind of correcting some of those mistakes and getting on a trajectory and a path that I'm more happy with, and kind of coming up with a better vision for the portfolio in the long term. So I would love to hear your guys's, visions for your portfolio, because I think that's kind of an important thing to have, so that, your everyday decisions, if you're not quite sure what to do, or if you're considering something but haven't made up your mind, you can kind of go back to that overall vision and say, does this decision, one way or the other, which of the options here more aligns with the long-term vision for the portfolio? So I think that can be a useful tool to help you kind of make decisions on a daily basis. So let me know what you guys do in regards to that, and if you kind of have a vision for your portfolio. Thanks for watching to the end of the video. I really do appreciate it, and I'll see you all in the next one.